Hey traders, Raghee here. Happy Monday, everybody. Welcome to Charts and Coffee for June 7th. Great to see everyone. Hope you had a great weekend, a little relaxing time, and also hopefully a little time to prepare for this week's action. Let's start off with a quick look at the calendar, and we're going to jump on over to Forex Factory for that. And take a look at what we've got coming up. Now, it looks like a pretty busy calendar, but you'll notice it's pretty much devoid of anything, A, this morning, and B, really from the U.S. At 3 p.m., we're going to get the consumer credit number. Could make the close somewhat interesting. Let's keep that in mind. The next thing is looking ahead to tomorrow, where we have some job opening numbers, which could be interesting in terms of, remember, the Federal Reserve has a dual mandate. So these are the kinds of things that I'll scan the morning for. Tomorrow, trade balance, and I'll just skim the entire week. So pretty quiet, more or less, the next 2 days, which means if we have any kind of movement news-wise, it's going to likely be of the unscheduled variety. The other calendar that I recommend you check out, and I'll usually do this on a Sunday night or early Monday morning, is also tradingeconomics.com. And that one is for, and interestingly enough, sometimes there are certain events, Federal Open Market Committee speaking, right? Speakers, Federal Reserve speakers that may not be listed on Forex Factory, but they will be listed on Trading Economics. So I'll just give that a quick skim. But that's about it, right? And that's really all it takes. During earnings season, I'll do the same thing with the estimized calendar. I'll go through which of the heavily weighted stocks in the sectors and in the indices. So we'll just kind of do a skim like that. This is the time, by the way. This is the time. We are in the middle of June. Now we're preparing for earnings, not in front of earnings, not the week of, not days before. We talked about 642 in previous episodes of our Charts and Coffee. Remember, where are we in terms of preparing to go back into earnings season? It just feels like we just stopped earnings season. Well, remember, we're ramping up for it again. And you'll notice as soon as you start hitting those financials, we're right back in it. And you'll notice we're just over a month out. We are inside that 642 window. All right, so keep that in mind. I get a lot of questions about earnings as we go into these high impact zones. And so the idea is, again, how are you preparing? How far out do you prepare? So definitely do check that out. There's a full breakdown of the 642 approach to earnings over at countdowntrader.com. You can check that out. And we have, I think, 2 or 3 articles dedicated to all the details of how I set up earnings. So we are right back in that window. So be sure to check out the Estimize, put the stocks that you track, plug it in. It's a free service. It's a free site. Love this site. Been using it for years. It's definitely one of my favorites. All right. So with that in mind, lots to always look at on the calendar, a lot of events that we have to be aware of in order to be better prepared for each and every trading day. All right. So with that in mind, let's see what we've got going on this morning in the questions. All right. First up is, hey there, James. I was looking for a few names that are trading in a tight range, CSX. So if we're going to do sort of the way that I look at it, we're looking for markets that are getting ready to break out, sort of freshly squeezed, if you will. And for me, that's going to start off with as many blue grab candles in a row inside either a narrow Darvis, which you see I have here on this chart, or inside the wave itself. CSX is interesting. Yep, I hear you there. So NSC, right. So what we want is really that range, identify that range, ideally pick a side, which is going to be definitely respecting the trend that preceded the consolidation, and then just wait for it to, one of two things. You can front run the squeeze, and that would be just picking a side with plenty of time. Or you can wait for the breakout. I will seldom wait for the breakout, but if you do wait for a breakout, make sure you take it quick, again, sort of freshly squeezed, and look at where you can benefit from maybe a squeeze retreat. In other words, a lot of times, not a lot, but there's a high percentage of times that we break resistance and dive back down into the range. That's where I usually like to build that position. So yeah, it's an interesting, that's it. Those are definitely the kind of markets I would look for. And yep, MO2. We've been talking about some of these in the Sector Secrets room, where I said, hey, we have plenty of trends, but if we do want to start thinking about non-trending markets, there's a very specific arrangement I'm looking for these momentum breakouts. And yeah, really good stuff there. Really good stuff. All right, next up. Hey there, Kevin. I'm looking long. I am long beans, okay, and corn. Resistance areas. Oh, for sure. I mean, major psychological levels, although we've taken that out on beans, and previous resistance levels, which we're testing right now, along with a major psychological level on corn. So you'll see there, we've got that Darvis resistance here. We've got the Darvis resistance here. So I would say anywhere between where we are right now, 696, 697 to about 733 on corn. I think you've got a pretty good shot to 645 on beans. Yeah, about 645 and about 665 after that, as we get to that next Darvis level. So those are resistance levels that I'd be looking at. And that's not counting, well, let's say we get inside days or different candle patterns I look for. That's assuming we don't get up to this +3 standard deviation too quickly, which case we could start to stall out as we have before at the +3 standard deviation of the V-score. So with those, I would say those would be really good price-based levels using the Darvis and previous highs. All right, so let's see. Next up, hey there, Alex. What metric do I use to decide if an ETF is worth looking at when building my watch list? Usually the first, it's going to be volume. It's got to be preferably fairly liquid. That way it's, well, A, it's got attention, and B, it's going to have more influence on the stocks that are weighted within it. And then the other thing I'll look for is structure, market structure, and preferably an uptrending one at that. Do we have a YT session? Actually, we don't. We don't. There will not be a live stream today. Thank you for the question, PSW. Yeah, we're going to be bringing them back sometime in the future, but we've done that now for, I guess, a couple months. And for now, those are going to be going on hiatus. So no live stream, actually, for the foreseeable future. But when they come back, I'll be sure to let you know. Thanks for the question. All right. So then we move on to, let's see, next question. Good morning from Australia, or good evening, my friend. Thanks for making it to Charts and Coffee. Looking at XLI, first trade. Ben, I don't look at Delta. I know that sounds like heresy, but I don't make that a priority. I make momentum a priority, not Delta. So having said that, XLI is an interesting name. I like XLI a lot. I like IYT a lot. I like DIA a lot. So definitely a trio of markets on my radar. I'm not at a price level that I would do anything with. And this is where I have to caution everybody. Again, just my opinion, but don't get too consumed with Delta. You could buy a great Delta at a wrong time. And what I find a lot of traders do is they get a little too concerned with the Delta they're buying or selling and not the momentum within which they're doing it. Now, that might sound a little different. That might sound like a little gobbledygook, but remember, the momentum is going to be very influential as to how much you're paying for that Delta. The Delta itself is not the sole contributor to the premium that you're paying or collecting. The momentum that you're doing it with is far more influential. Volatility is the option secret, right? And this is actually something that we'll be talking a lot about. In case you don't know, I just mentioned that on June 16th, we have a webinar coming up. And then on June 26th, I have a class coming up. And partly, I mean, even though it's going to be a short-term time frame oriented class, capitalizing on momentum end of day is no different than capitalizing on momentum intraday. The time frame, the interval almost doesn't matter. You're trying to take advantage of sort of a momentary psychology to give yourself an edge. I don't have an edge here, and the delta itself doesn't do it. So when I say that I don't look at delta, I don't say that just to sort of, mm, throw a lot of classic option strategy out the window. But if that worked consistently, I would. It just doesn't, right? I don't get too consumed with delta at all. In fact, most of the time I'm blissfully unaware. But somebody did ask me what the typical delta is that I focus on. I don't, but where do we end up more likely? We end up around a 50. It's very common that the strategies that I use end up around a 50 on the delta. All right, how often does the HPMR indicator have to be updated? Nancy, it's dependent on volatility. And it's funny you mentioned that. I did update them today. In fact, before we went on live, I was updating the currencies, futures, ETF, and stock HPMRs. How often depends on the volatility. If volatility is pretty steady, as it sort of has been, then it doesn't need to be updated that often. In an ideal world, it gets updated about every 1 to 2 weeks. Realistically, it depends on the volatility shift. So I actually updated them today. And if you're in the sector secrets room, or if you're in the futures room, you'll find in the sector secrets, the stock and ETF HPMR is updated. And in the futures room, you'll see the currency futures, and our futures HPMR pack is updated. So it just depends on the volatility, Nancy. Yeah, it does. But for those of you that may not be aware of what an HPMR is and how does it factor into my trading, that 16th webinar is going to discuss how HPMRs work, where the data comes from, and how what it is that they give me when I'm intraday or even end of day trading. So I think you guys will really, really like that. Okay, next up, corn. Corn is going to be no different than ZC, Eric. So I like ZC, therefore I must like corn. In fact, I will look at ZC more than I will look at CORN to understand where corn is going. But as far as where I think it's heading, path of least resistance, you've got some in the money, really deep in the money calls with plenty of time. I think you're sitting in a really good spot. The same resistance levels that I spoke of before on ZC for the earlier question, I would use that as sort of the guidance to manage this. Do make sure that you pay yourself, if you haven't already, scaling out at least around the 730, 733 level. If you haven't already, certainly that's your prerogative and you know where you bought them and what you paid for them. But in terms of when you should definitely pay yourself, you want to make sure that your first target is not in brand new blue sky, that use the Darvis levels that are hanging out there, use the resistance that's pretty much staring us in the face, and be proactive about paying yourself and moving the stop to a break even. All right, so then let's see. What signs in the market tip you off for major pullbacks like last year's COVID hit? Al, I don't think it works that simply. I think there's a lot of people on television that like to say their secret squiggle told them. The truth of the matter is, I'm a counterpuncher. I think most traders are. I'm not going to sit here and tell you there's some secret squiggle that showed the market precisely in front of COVID was overbought or toppy. Chances are any indicator like that was indicating that for some time. That's a difficult question to ask because I find that the idea that there's some indicator out there that's going to find the magical turns, whether it be the V bottom of the Federal Reserve in 2019 and 2020, whether it be the COVID top, whatever it is. Remember, there was a post-COVID bottom when the Federal Reserve started buying ETFs via the Treasury. So buying HYG and JNK, high yield corporate and junk bonds. I don't believe there's an indicator out there like that at all, and not consistently. So, it's up there with unicorns and Tooth Fairy and Santa Claus. Just know. Some tools may have found one of those turning points, but there's no tool that's always going to find those turning points. So I'm more interested in counterpunching. I'm more interested in looking at the way price action moves and then seeing if there's something I can do with that movement, not projecting levels that, quite frankly, no indicator is going to consistently project. I mean, I wish, right? I would love to tell you there's something like that. But I think if you really ask yourself, say, well, right, is there an indicator out there that talks about whether that be 1997 and the Asian contagion and the long-term capital management implosion, or whether it be 2008, 2001, whether, you know what I'm saying? It just doesn't exist. I wish it did. I wish it did. All right. Hey there, Dorothy. I noticed some of the country ETFs, EWJ, EWK, et cetera, don't have very good open interest and volume. On the options, you're correct. Is this something I factor in? Absolutely. So Dorothy, if it's illiquid, if I'm not seeing at least 500 open interest, I'm wandering into a market of tumbleweeds, and I won't do it. Yeah. So it's not always going to be viable to have a setup in those scenarios. So I just move on or try to find an alternative. But there are many opportunities that I have to say no thanks to in markets like the IYT or the XLC, because the strike and the expiry that I'm focused on simply doesn't have adequate liquidity. So yeah, I will just pass on it. Good morning from Germany. Wow, good morning or good afternoon. Thanks for tuning in. Let's see. Is it too early for back to school retail plays? Mark, let's go back to the earlier question about projecting or where there's going to be turns in the market. Look at how the markets are responding to that potential. Keep an eye on XRT. Keep an eye on those stocks that you would consider back to school stocks. And when they start pulling back within the context of the respective uptrends, whether it's back to school or not, I think those opportunities could preempt the sort of back to school rush. The back to school rush, if there is a setup for it, which we know oftentimes there are, is going to be much of a reopening play. So in terms of it being a potential reopening play, let's not worry about the calendar as much. Let's think about, because remember, if we all know that reopening and back to school is coming, then remember, much like people talk about the summer driving season, by the time people start talking about the June and July summer driving season, that's already been discounted, usually going back into March. Same thing with anything that's on the calendar that we know is coming. The discounting is going to occur in advance, well in advance of it. So just study the markets that you want to be buying pullbacks in anticipation of back to school rallies and take advantage of it that way. Right. So that's the way I look at it. The timing in that regard is the discounting that occurs well in advance. COP, probably not my favorite in terms of a potential, Neil. We're at resistance right now. So the structure is pretty good, but the level that we're at is really not beneficial. Yeah. As far as FedEx goes, we were talking about FedEx and sector secrets last week. And, a lot of the members were asking, can we buy the pullback? And I said, let's wait. And so probably today, tomorrow is when, let's see here. Today or tomorrow is probably when we're going to start looking at the setup for that. It's a little more volatile than I'd like to see a pullback occur. But remember, this is a transports play, and I'd like it to be in sync with the broader sector. So thank you for that question. Is the upcoming day trading class for mainly futures? No, actually, Navin, sorry if I mispronounced your name. It's not. It's yes. It's everything I do will focus on this hierarchy of index sector stock. It has to, because of the weighting in the markets at the index and ETF level. Index sector stock is that top-down approach that works. Bottom-up doesn't work in this market. And the more ETFs become influential over psychology, the less bottom-up will. So we focus on top-down, index sector stock, which means as we're getting clarity on an index, we can get clarity on the ETF alternative. We can get clarity on sector ETFs. And gosh, my glasses are bothering me today. And we can get a clarity on stocks. So it's going to be about, yes, day trading the futures, but also when the futures have clarity or the futures are indicating a certain kind of movement, what door does that open to day trade the ETFs and to day trade the stock? So they're in sync and you've got better confirmation. So it's going to be a lot of fun. I'm really looking forward to the class. All right. So just like that, Charts and Coffees, that's a wrap. I'll see you all tomorrow. Tomorrow we'll take a look at what this week is going to present. Some of those transports, staples. I'm looking at housing and home builders and construction. A lot to look at here in this post non-farm payroll week, which tends to be a little light on data releases, but we'll see what we've got. I think that's going to be great for us. I'll see you tomorrow, same time, same station. Be good to each other and be patient. It's a Monday. Okay. I'll talk with you soon.